It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, November 18th, 2015. Oh boy, another jam-packed newsletter in store for you guys. Lots of trading ranges in tonight's newsletter. And of course, we'll be opening up our live trade room tomorrow morning with all of our students here at School of Trade at 8 a.m. Eastern Time. First of all, starting out tonight on the black gold crude oil, we survived inventories. We survived rollover. Crude oil futures, the CL 116 contract for tomorrow, trading inside a multi-day trading range. So we're rotating higher after testing the lows of the range this morning. So our plan will be to look for buying opportunities as we rotate up to the highs of the range. We get a plan for all the crude traders tomorrow. The E-mini S&P, very bullish, very bullish. That statement from the bulls continues. Get a strong push higher today. Get a major bull channel. 3 measured moves higher. Plan is pretty simple for tomorrow. Stay to the buy side, but wait for that measured correction off today's highs. We're going to plan for the E-mini S&P later on in this video. How about the gold? Gold is trading sideways inside a very narrow trading range with a bearish bias this evening, which means we'll be looking to fade all the breaks higher, and we're going to use that 2-try rule and range rotation to find the best trades for tomorrow on gold. Gold is shaping up to be the most challenging market tomorrow, and I'll show you why. Very narrow range for tomorrow. And wrapping up tonight's newsletter, we've got the euro. The 6E is trading sideways inside the same range from yesterday, just like the gold, which means our plan remains the same. We'll use failure patterns to profit from range rotation as we look for buyers and sellers caught on the wrong side of the market for that euro futures market tomorrow. As you can see, we got planned for euro, gold, E-mini, S&P, and of course, we can't forget the crude oil futures. Before we jump into our charts and put together the strategy for tomorrow, I do want to remind you to make sure you're watching this video on our trading blog here at Sideways Markets. If you're watching the video on our YouTube channel right now, there's a link in the description of the video tonight that'll take you over here to our trading blog. First of all, upper left-hand corner, you can grab a free pass. Come out and test drive our live trade room as a guest for a day. I'll give you a free pass, upper left-hand corner, if you're not a member yet. Come out and join the trade room this week or next. Next thing, lower left-hand corner, right above my ugly mug, you'll see a spot to register for our nightly newsletter mailing list. All I need is your name, your email address, and then make sure you check your inbox because I'm going to send you a verification email to make sure we get the right email address. Right below the video tonight, you'll see a spot to download all the charts that you're going to see me using in tonight's video. Nice handy tool there for you guys. Now you have those ready for tomorrow. And of course, don't forget, we got our membership information on the right-hand side. You can register as a trial member. You can learn more about what it means to be a lifetime advanced member here at School of Trade. And you can read real member reviews on our blog as well as get help every step of the way. 24/7, 365. Use the live support button on the right-hand side. I think we're ready to rock and roll here, guys. Wednesday evening, halfway through this third week of the 11th month of the year. Hope you guys are having a great week with us. This has been an incredible week. Crude has been way too easy over the past few days, I got to admit. So I'll take this. If we can just keep this up the rest of the year, I will be a happy trader. How about the plan for crude tomorrow? Crude, don't forget, we have rolled over to the 116 contract now. They slipped it in on us today. If you notice, we woke up this morning in the U.S., more volume on the 116, so we had to make a last-minute adjustment. Hopefully you guys saw that as well. I can only go so far as trying to predict when exactly that volume will roll over. That's one of the benefits of being with me every day in the trade room. So we picked up on the 116 rollover this morning. We traded the 116 today in our trade room. And, we had inventory today, so we had to we knew today was a possible just storm to avoid, but it was actually very, very easy. Inventories were easy. Rollover was easy. Like I said, crude's been a pretty darn easy market the past few months. I'll take it going into the year for sure. Crude oil trading inside a multi-day trading range this evening, and we're rotating higher after testing the lows of the range. So our plan is to look for buying opportunities as we rotate up to the highs of the range. Now look closely, and you can see the sellers missed the low of that range by 1 tick. The low is down here at 41.27. And you'll notice, you got to look real closely at this, it actually went right to 28, right? So this is one of those times where I say, is this going to be close enough or is this going to be in other words, did they miss it, or are they going to be coming back tomorrow to finish off that job? So I'm a little bit on the fence right now. It does look like the bulls, though, have taken complete control in the short term. So as of right now, I'm going to say we're bullish, rotating up to that high. Okay, but it looks like those bulls are going to take this thing higher, looking for seller failures on the way back up. Guys, this is going to be a very common theme in tonight's newsletter. And remember, trading ranges are one of those skill sets that they're very difficult to learn to trade, but once you understand them, they become really, really easy, right? This is my favorite market environment. Most new traders would say a trending market is your favorite market environment, but remember, the best trades on a trending market usually look like crap, right? End up being the best trades. On a range-bound market, it's just range rotation, two-try rule, and remember, students of mine, failure patterns, right? Failure patterns, catching traders on the wrong side of the market. So let's go over range rotation, the two-try rule, and remember, we've got ranges on crude, gold, and euro. It's just the S&P that has that strong trend today. So right now, you'll notice here we've got the big old trading range from 77 down to 27. We start off the low, we rotate to the high, right? Tag you're it, rotate to the low, tag you're it, rotate to the high. So the buyers tried here. Buyers tried a couple times to get it to go higher. We know better. We're looking for failures that high, right? All the way back down, tag you're it. And then now, of course, right, we're looking for that rotation back up to those range highs, right? If we get up to those range highs, assuming we touch the 42.77, we'll then look for rotation lower. But this is where it becomes interesting. As we rotate inside this trading range, let's draw it up here real quickly, and you can use the same illustration for the rest of tonight's video, right? So we take out the range here, we project one deviation higher, I call it expansion higher, expansion lower, and what we're going to do is we're going to rotate from top to bottom, bottom to top, top to bottom, right, inside that range. Now what you're looking for is, you're looking for opportunities or scenarios where the bulls move the balance area up into the range above, or the bears move the balance area down into the range below. So here's what you're looking for on these range rotations. Let's say the buyers try to run this price higher. I'm going to give them two tries to get to that next level. If they get to that next level, now we rotate in the range above, right? The balance shifts higher. Now, what if they fail? What if we give them two shots, and what if they fail? If they fail, that's the failure I'm looking for now, and I want to sell it right back down to that range. Now, this is where we talk about that pendulum swinging, right? So here's your pendulum. The buyers run it up. They're not going to just swing back to the center. They're going to really counterbalance, right? The pendulum will swing all the way back down. So what's typically going to happen is, if these bulls miss that rotation higher, obviously now our job, this is where the failure patterns come in. Sell it back down, range rotation down to that low, but this is where the critical part comes. We expect that pendulum to swing all the way through. They're going to try, right? Again, give them two attempts. If they can get it, then that range, the balance, right? Remember, that's what this is. A range-bound market is just a balanced market. They've agreed on price. Once they get to that next level down, then they've agreed on the next price, and we'll balance out there. If they fail, right? If they fail, again, we know where the stop losses are going to be. We know the counter. We know that the uninformed sellers here, we know exactly where their stops will be, right? And we're looking to buy back into that range. So again, channel rotation, two-try rule, failure patterns, that's the name of the game to catch traders on the wrong side of the market with these ranges. Now you can see, here's a good example. So here we have a trading range that has a, we'll call it a major bear channel coming in. Now here's the problem. This is a phantom channel waiting to get in trouble, right? So sellers here now will try to sell this high, not seeing that range. And guys, let's be very honest. They may be successful. and we may run all the way lower. I can't predict that. What I can predict, though, is if they fail. I know if they fail right here, we know exactly why they're failing, and that's going to be my opportunity to buy up to that range rotation. Then, right, so that's the phantom trend line. That's what I mean, catching traders on the wrong side of the market. Okay, so we go up, rotate to the top, give the buyers a chance to run it up to the next rotation, 44.27. If they can't get the job done, it comes tumbling right back down, right? Rinse and repeat over and over and over again. Like I said before, trading inside of ranges falls into the category of something that's difficult to learn, but once you learn it, it's very, very easy to do. One of my favorite environments are trading during balanced range-bound markets because you can just tell where those breakout traders are going to have their stop losses. And again, we don't know if they're going to fail, but when they do fail, and they often do, we have a very high probability trading opportunity going back towards this range. Keep an eye on that tomorrow. Keep an eye on that tomorrow. That's not the last you're going to hear from me tonight regarding trading ranges. Let's look at the S&P 500, right? Thank goodness we get at least one market right now that's got a pulse and a direction right now. Now, remember, obviously, here's a trending market in the S&P. Okay, trending markets appear to be the most, the easiest, right? I mean, wouldn't you think this is the easiest one? Well, now, given the easiest part about this is there any doubt about direction? No. Right? On that range-bound market we saw earlier, I can buy, I can sell. I like that about that, right? On a bullish market, you've only got two choices. Either you're going to be a counter-trend seller, which as of right now, you've probably got a window opportunity to do that, right? Down to 74.25. But you're playing with fire, right? You're playing with fire trying to trade against the trend on the S&P for crying out loud, right? You better wear a helmet. You better get some life insurance on that. Okay, don't do it on your own account, do it on somebody else's account. Or you've got to wait for that correction and then buy the dips, right? So there's only two options here. Either I counter trend against it, right? Or I have to sit patiently and wait for the time after the deep pullback. The problem with trending markets is that it requires a lot of patience. And oftentimes, the biggest moves come on the worst possible patterns because, you know, it's almost as if because everyone assumes these trending markets are so easy, right? And at first glance, it would appear this is the easier market to trade today, but it won't be because you know professional traders are not going to allow the easy stuff to be that successful. The patterns that set up during trending markets, the beautiful patterns oftentimes are traps, so watch out. Usually the crummy patterns, right, the ones that look like, oh, this will never work, that's the one you want to take, right? As we say in our trade room, you got to put the big boy pants on when you trade in trending markets. It's going to feel uncomfortable when you take those trades. Just make sure you take them in the right spot, right? That's going to be the key. So a trending market, S&P is bullish, strong bullish. This is after Monday, and Monday we came out with that statement day. We went balanced yesterday, and now they take it back to the upside again. Just a beautiful run right now the S&P 500 is going on. And you know where they're gunning for, right? That 2100, that big round number. Now, obviously, I can't tell us when we're going to get there, but I know right now that's definitely on the minds of the bulls right now, the S&P. Okay? Major bull channel, multiple measured moves. I mean, look at how well-behaved this whole market is. Look at how well-behaved this market was today. Channel rotation, right? Channel rotation. Tag your it, tag your it, tag your it, right? Channel rotation. And that's going to be one of the key components to trading a trending market. Now, what is also very impressive, almost a little bit concerning, it's so perfect. Again, this is the S&P. This is not a video game. Markets don't usually behave this well, especially not a rambunctious market like the S&P. So we know we got 1, 2, 3 measured legs higher, very symmetrical. So markets behaving very, very well right now. Bulls had clear control, channel rotation, multiple measured moves going higher. Now, here's a very big clue. Look at the volume up here at the highs, right? This volume profile, you can see a lot of volume down around this 2060 area. No surprise there, right? That was that first pullback, right? So that was where the buyers really got their, kind of sunk their teeth into it today. But what I find very interesting is the volume spike up at the highs here today. That tells me one of two things. Either traders were buying the high after they heard the FOMC meeting minutes today, or what I think is more likely is traders took their profit. Seeing the channel rotation, seeing the measured moves, right? They get out of their trades. They took their money out of the market and they're going to wait for the next deep pullback. That's what I will be doing tomorrow as well. So, volume at the highs, big clue, buyers took their profit at the close. Now we look for additional opportunities after measured corrections. I always like to use measured corrections and then seller failure for the most reliable trades on a trending market, right? Look for an ABCD coming down. We don't know enough yet though, right? We don't know enough yet. So here's option one. Option one is going to be buying the dip at the low of the channel. I highly doubt it's going to be that easy tomorrow, but I will gladly take it if it does. What is more likely to happen is we're likely to get scenario two, which is we have a measured correction. Back down, A, B, C, D. That'll give you plenty of time, right, to get all prepared for this. And then remember, it's not going to be as easy as just buying right here, right? It's not going to be that easy. This is the difficult part of trending markets. You're going to have to wait for that measured correction down, possibly back to this 2065 area where we saw a bit of a trading range. And then, sellers are going to confuse this, right? They're going to try to sell this thing. The stops will be right above their highs, and that's where you want to be buying, right? Again, it'll be a little bit uncomfortable. That's the way it's supposed to work on a trending day. Remember, the beautiful patterns are oftentimes traps, and the ones that look like garbage are usually the ones that work out the best. You've got to remember that. One last scenario here, and we saw it already this week. If you remember this week, we started out on Monday with this strong move higher, right? Monday, Tuesday was a range, and then now we're continuing. So, will tomorrow, Thursday, be another trading range? We shall see. History oftentimes repeats itself. And so here we came out of that trading range from Tuesday, nice big run up on Wednesday, into a trading range on Thursday. That's going to be scenario number 3. Now again, we don't have enough information for this yet. But if I had to guess, I would say we're probably going to be something like this, right? Something like that. You get a previous high here, a couple double bottoms there, right? So bottom line is, I don't know where this range is going to be, but if we see this market start to go sideways tomorrow, you know the plan. Stay to the buy side. It now becomes a bullish trading range. Look for bear traps at the lows and fire away. So scenario 1, we're buying the lows of the channel. Scenario 2, we're buying after a measured correction. Scenario 3, which may be the most likely tomorrow, is going to be after we see that short-term trading range, then start picking off those bears, right? Start picking off those bear traps at those lows, taking nibbles with seller failures. Measured moves up, measured corrections down, channel rotation higher, counter trend traps, and if you remember with me, you know what we always say, right? In a bullish market, the buyers have the benefit of the doubt. Make the sellers prove it to you. And if you don't know what I'm talking about, you got to come in and see me tomorrow morning. We open up our live trade room at 8 a.m. Eastern Standard Time. Let's keep going. How about some gold? Now we're going to wrap up this newsletter with two this is going to be the most challenging one here so far. Gold is trading sideways inside a very narrow trading range. We get a bearish bias going into that range, which means we'll be looking to fade the break higher and use the 2-try rule with range rotation to find the best trading opportunities tomorrow. Clearly, today's FOMC meeting minutes had the attention of gold traders all day, which means tomorrow's reaction to the news will probably tell us exactly where we go next. We'll be paying close attention to that 2-try rule and range rotation on Thursday. So again, it's very, very obvious, and you can see by the reaction, right, at 1400 at 2 o'clock this afternoon with the FOMC announcement. You can clearly see it screaming at us today. Very narrow range. We have a bearish bias going into the range. Which means if someone put a gun to my head, which I don't encourage anybody to use guns, but if somebody did and said, Joe, buyer or seller, what are you going to be, hot shot? I would say I got to be a seller, right? Bearish bias. Now, that's only going to go so far tomorrow because, again, I have a funny feeling tomorrow's going to be the day where we see the big reaction to those FOMC meeting minutes. Basically, what we heard today from the FOMC minutes was that we are on for rate liftoff, well, potential rate liftoff in December. And so, of course, now this market will move to price that liftoff in over the next few weeks. Okay? Look at rotation. Look at rotation. Tag your it. Back to the range high. Tag your it. Back to the range low. Tag your it. Right? Sellers didn't even try a second time. Back to the high. Tag your it. Now, here's something interesting. Right? We try to go up, miss the high, finish the job off, tag your it. We go up, tag your it. Now we're trying to go down to that low, right? So right now, range rotation tells us we should be rotating down to that 65.1. Now remember, I can't predict tomorrow. Neither can anybody else. What if the sellers can't get to 65.1? What's going to happen? Pendulum swings, right? Pendulum swings. So we know the sellers, because of rotation, sellers have the objective now to get down to 65.1. Where will they go if they don't get to 65.1? Right? We'll give them how many tries? 1 try, 2 tries to get there. They've already tried once. We'll give them a second shot. If they can't get to 65.1, where are we going? First of all, we'll go to 70.9, but we're going to overcompensate and up to those range levels above. Then remember, if we fail to go lower, we get up to that 76.7. Now the range, right? Now the balance shifts, and we play the range rotation game inside of the range above. I see this being a very challenging market tomorrow just because of what we talked about earlier with the FOMC minutes that came out this afternoon, which pretty much just took it right out of their pocket and said, bam, December rate liftoff. Deal with it, right? That's pretty much what's going on with gold traders right now. I can't wait to see what happens tomorrow. Tomorrow's going to be the giveaway. Tomorrow will be the giveaway. And, of course, last but not least, how can we forget about the euro? Now, remember, I trade currency futures. They're much more efficient for tax advantages. They're much simpler. They're a real market, right? Forex, of course, being a synthetic market. I'm trading against other people instead of my broker. It's a lot cheaper to trade futures, right? You need more money in your account, but the cost of doing business is much lower for trading futures. I got many, many reasons why I've chosen futures over Forex in my trading career. Euro is trading sideways inside the same range from yesterday, very similar to gold, which means our plan is pretty much exactly the same. We'll use failure patterns to profit from range rotation as we look for buyers and sellers caught on the wrong side of the market. Now, heads up, sellers just missed their rotation of 0619, right? We gave them 2 shots, 1 shot, 2 shots. They had 2 tries to get down to 0619. They didn't get it done. So we now expect what? The pendulum shifts. Wham! And then, of course, just so happens here, we have this lonely gap up here at 0696. That looks lonely right now. That will want to be tested. And, of course, 0709, that's in the cards after we fill that gap. If we do get to 0709, we then turn into the balance higher, right? If we miss the 0709, pendulum swings down to 0649, but more importantly, the pendulum will swing all the way in the opposite direction, and they'll try to get to the 0619. As you can see here, guys, pretty much rinse and repeat for euro, gold, and kind of a different scenario on the crude, but same strategy on crude here for tomorrow. I do expect these bulls to run this market higher on the euro. The only question I have right now is how high will they go? If they can get to 0709, we have a new balance area above. If they can't, it'll come crashing right back down, and we'll look for targets at 0649, 0619, and possibly all the way down to 0589 on the euro. On the gold, I think the gold is the one you really got to be careful about tomorrow. Real narrow range. Again, though, we would expect here the sellers to try to get to 65.1. If they can't get that job done, we should rotate higher here. right up to those next range levels above. Again, I know this market looks like the easiest market, the S&P 500, but remember, the best trades tomorrow are going to look like dog crap when they're setting up, right? Remember those three scenarios: buy channel lows, buy the measured correction, or buy the lows of that what is likely here, if history repeats itself this week, of that trading range, right, that'll form and then break down and then slam higher. And then, of course, on the crude, we get a multi-day trading range. We're expecting rotation up to 42.77. And again, I can't predict tomorrow. If we can't get to 42.77, remember, it looks like they did miss that low here, right? So look for that phantom channel to possibly hold, revisit that low, and we may come in tomorrow and see price right down at these lows, right, testing 41s, testing 47, and then we'll look to buy it right back up. We'll look for that seller failure, so on and so forth. Guys, don't forget, we do all of this together every morning, live in real time in our trade room. Come out and join me. Don't forget, grab the charts for tomorrow, register for your free pass, join the newsletter list. We've got jobless claims, Philly Fed tomorrow morning, and I think tomorrow will be a day of reactionary procedure for a lot of the major hedgers in the market. Remember, these are futures, so everyone's, the big boys and girls are hedging, right, in the futures markets. Tomorrow will be the reaction to the FOMC meeting minutes. Last but not least, don't forget, we take a lot of pride in the fact that you're going to learn more with me in my free trial here at School of Trade than you will anywhere else on the interwebs. We have 3 levels of membership: beginner, intermediate, and advanced. I don't care whether you're brand new to day trading or you're a grizzled veteran still trying to put the pieces together on your trading career. We always have someone standing by 24/7 to help you guys out. No questions too big or too small. Now, don't forget, send me some feedback. How can I make this a better newsletter for you every evening? I'm JJ at schooloftrade.com. Give me a like or a dislike. I don't know why you dislike this, but give me a like or thumbs up, thumbs down on the YouTube video. Share this information with a friend. Come out and see me tomorrow morning at 8 a.m. for our trade room, or we'll do it all over again tomorrow evening, 8 p.m. Eastern time. My name is Joseph. Be well out there, boys and girls. Be nice to each other, will ya? I'll see you next time. Adios, amigos. Bye-bye for now.